Okay, welcome to the last theoretical video of the course. In this video, we're going to talk about this last bonus pattern that I wanted to mention, since you cannot really end any classical technical analysis chart patterns without mentioning this one, as it's one of a very well-known one amongst classical traders of patterns. So that pattern will be what we call the cup and handle. And the name obviously comes from the fact that you see it looks like a cup with a handle. So the cup and handle is a bullish classical chart pattern that is seen most often at the bottom of trends when we have a price wave down followed by some consolidation at the bottom where long positions are being accumulated. We rally up, similar in size to the downfall that we had. Then this creates a retracement, which usually can go sideways or it can go downwards in a flag, pennant, or wedge formation, which is basically indicating what? Momentum continuation to the upside. So in reality, this is a combination of two types of patterns on a chart together, and then based on these patterns, price is likely gonna break to the upside. And we've essentially it's a continuation pattern forming, and the bottom of the cup was the support area that held price. So then we expect this to break out, and then we continue making new highs. Okay, so this is an example in the S&P 500 in the 1 hour chart. So as you can see here, we had price was coming in a downtrend, then we have this down move, we have this consolidation down here that is being held by a support level. We have a triple bottom here. Price continues, and then right here, once we break this high, market structure has been broken to the upside now, and now we just start looking for patterns. Over here we have a falling wedge, which gives us an upside continuation breakout. Further up, another falling wedge, further continuation. So we see we just get one bullish pattern after the other. And so as you can see, basically you have the cup formation here, and then the handle here in the shape of a falling wedge, and then we continue. Okay, and so now let's just go into some actual charts to see some examples. I got 3 examples for you of this pattern. It's a pretty common pattern, and it's again the same as I always say with all the other patterns. You know, they may not look perfectly like a perfect diagram, but you sort of get the idea from them. Like in this case, we have here dollar was uptrend, then we fall here, and if I just put the curve tool, we can see that right here we fall and we make a cup pattern. You know, and the cup, we can have either like a very nice rounded cup, but sometimes we got more like this, what people call V-shaped reversals, which this indicates, you know, price sells and comes back very quickly. That's also a very bullish pattern. So either one of these works. You know, it can be rounded or we can have more of a V shape. And then here we have some price consolidation. We can see that this previous low was not broken, so the market structure hasn't we haven't really shifted. And then once we get up here, we see that we got right here, we got a flag or channel just coming down. And then what do we expect? Well, we expect continuation of the movement. And then you can see right here, if we want targets, we could target the previous swing highs that we had over here. Okay, so as you can see, this is a good bullish continuation pattern, which we see. It's not always, like as you can see here, that did not happen at the bottom of a downtrend, but normally when you find this at sort of the bottoms of like big down movements, this is a strong pattern signaling that there is a change in structure to the upside. Let's look at the silver market now. Let's go into the 4-hour. Let's go to January 23rd. You can see here. I was this big one here. So as you can see here, like you can see in this example, we don't have like a perfectly curved cup, but basically you get the idea, where we have a downward in price, we have price consolidation over here, we start going up, and then right here at the edge we have this wedge sort of pattern forming. Over there, and then we can see how price came. We have this wedge which signals continuation, and we can see that we break out and we came and attacked all this previous swing highs that we used to have over here. Okay, so this is a very good bullish momentum pattern, and again, you know, it takes some visual interpretation when you're looking at it, and then the same, you're obviously going by all the rules that we've discussed about before, where you want to see volumes when we're breaking out. Here we're going to June 8th. We have this here. Let's see, well, this was more, this is similar to this one, however, we can see this was also sort of like this was more like an inverted head and shoulders, but it had the same concepts. Here, this is the one I wanted to show you. You know that these patterns don't always work. So like in this case, we had this here, where we had the formation, we had a channel down. We could have expected this, but the pattern continued down. So again, you know, I want to illustrate how we always should expect patterns to fail. However, overall, we see how, you know, this pattern is found in a lot of markets in all different time frames. And this cup and handle, it's, you know, a very classical pattern with regards to technical analysts. Like here, this is not like a very clear or very neat shaped cup, but we have this. Then we have let me use the line tool so it's neater. We have the pennant, and we have the breakout to continue. Okay, so basically the cup, we can see it as sort of a bottom that we form where we establish a level of support. Okay, so that's it for the examples in regards to this pattern. And I hope you've enjoyed all the theory with regards to chart patterns. And on the next video, we'll just go over the conclusion of the course and the last points to keep in mind.